Hello everyone, my name is Mike Greenlay and I'm pleased to welcome you to the very first Tradition Mortgage podcast. Our goal is to give everyone a look into the industry and how it works, as well as to educate everyone on what is really important when it comes to potentially one of the biggest decisions of your life. Every week we will discuss the markets, how they may affect rates, as well as the industry itself. We will also introduce guests from the financial, real estate, and home building disciplines in order to illustrate how all of these industries interrelate. The mortgage industry has seen record amounts of volume in the past year, but it hasn't come without adversity or potential disaster in some cases. Joining me today is the president of Tradition Mortgage, Erik Hendrikson, to discuss the past year and look ahead to what is to come. Welcome, Erik. Glad to have you with us.
Hey, thanks, Mike. Thanks for having me.
Can you give us a brief overview of the past year, since it did have some of the highest of highs, but of course there were some pretty low lows as well. Can you kind of give us a little synopsis?
Yeah, it felt like 10 years in 1 year. I mean, it really was just a roller coaster ride. I would say that, we entered 2020 really riding a mini refinance boom at that time, and business was really good. But really when the virus got over to the United States and the economy started to lock down, that's when things really got scary in the mortgage market. One of the biggest determiners of value of a mortgage is the future kind of servicing rights, the stream of interest income that comes in on a loan. And the biggest fear was with this lockdown of the economy, was it going to have such an impact that you were going to see mass, millions of people unable to pay their mortgages. Mm-hmm. So really our entire market kind of seized up there for a while, and it really created some chaos, and that was kind of in the late March, early April timeframe. So really at that point in time we thought, man, this could really be, would make the last financial, the Great Recession look mild in comparison. So it definitely started off on a really shaky note there in March. But little did we know that things were going to swing around, but it took some time.
And it really was an amazing swing, because there were some mortgage companies that just didn't make it. They just didn't make it through. The ones that did seemed to pick up the pieces and have an absolute incredible record-setting year after that. So it was almost like, make it through this test and you'll be somewhat rewarded, and it appears like that's what the industry has done.
Yeah, it was kind of survival of the fittest there for a couple of months, as we really didn't know if the mortgage market was going to disintegrate or it would stabilize. The Federal Reserve came in and started buying billions of dollars worth of mortgage-backed securities. Those are kind of the big pools that the majority of the mortgages that us independent mortgage bankers, the majority of the loans that we close, are sold to Fannie Mae and Freddie Mac, and they're turned into these bonds that are sold on the capital markets. And the government decided, hey, we're going to get in there and we're going to be a buyer of these. We're going to stabilize at least the interest rate component of it and keep people believing in those mortgage-backed securities. So that certainly was, a very helpful factor to really bring rates down. But overall, what we saw was a very resilient overall economy where, kind of overnight the switch was flipped to working virtual, and they didn't know, are there going to be mass layoffs? Again, was this going to create mortgage defaults at a level we had never seen, therefore just basically blowing up underwriting criteria, and we started to see some guidelines be kind of put in there that were very conservative. But thankfully, by the end of April, really the economy kind of stabilized, albeit at a much higher unemployment level, but not anywhere near as bad as they thought it was going to be. And once things stabilized, then you had some consistency in underwriting, and again with the Federal Reserve in there buying billions of dollars worth of mortgage-backed bonds, really drove rates down to levels we had never seen before. So now we had stable underwriting and we had incredibly low rates. and then it was just throttled down, and it was time to basically refinance everybody in the country.
It certainly seems to have occurred that way. When you look at Tradition Mortgage, they've been around for over 20 years. You don't last that long in what is a very highly competitive industry such as this without knowing how to manage the details and the people in the business as well. What has it been that has allowed you to build such a great business here with Tradition Mortgage?
Well, you start with good people, and I think good people attract more good people. So I was, very blessed to have some great partners when we started the company back in 1998. And we had no idea, where we were going to go with it. We were just hoping to stay in business each year.
Mm-hmm.
But we were blessed, and we had attracted, some good young talent back when we first started, and those individuals stayed with us and kind of grew up with us and became some of the most successful mortgage bankers in the country. And slowly that reputation has been built where we've again attracted more good long-term professionals that really want a place where they can come, and be a grown-up mortgage professional and do business. And I think the overriding principle is don't lose sight of what you're really trying to do for people, and that's to help people out. You're either getting them in to a new home and helping them with what is probably their largest financial transaction of their life, or you're saving them money by doing a refinance and you're putting them in a better financial position. So we're trying to help people, and I think that as long as you don't lose sight of the fact that you're trusted with this large transaction, and ultimately you're supposed to be doing right by people, and we've been blessed to have those kind of individuals in our company. And it's hard to believe that it's been 21 plus years already.
That is incredible. And Tradition Mortgage, just to kind of give everybody that doesn't already know a brief overview, Tradition Mortgage is part of Tradition Companies, and they're identified as a family of Minnesota-based companies. And although it isn't as simple as identifying them as one family, because there's a lot of investors, different connections, different investors, it definitely started from one family and has grown into a larger family. Can you give us kind of a brief history on where things came from and where they are, and even if there's something that that we can expect in the future, that as well?
Sure. We started with a small group of individuals, and really it was kind of two original companies, Tradition Mortgage and then Tradition Development. My brother-in-law Jake Ennebeck and my father-in-law Tip Ennebeck were really involved in the land side, and they had a family excavating company, Ennebeck Construction, that had actually been around over 100 years. That was their area of interest, and I came along, and my now wife Leah, back then Ennebeck, kind of introduced me to Tip and to Jake, and mentioned that they were looking at kind of building their business brand, and I had a group of people from the mortgage banking business, and we were interested in starting our own company, and we were kind of looking at doing it solo. But at Leah's urging, we got together with Tip and Jake back in the late 90s and talked about ways that we could create synergies and kind of co-brand companies. So we started Tradition Mortgage as a separate entity and Tradition Development, but we shared office space and computer systems, and certainly for us young guys back in the 90s to be able to piggyback off of a great business reputation that Tip Ennebeck had, that certainly was very helpful. And along the way, we certainly didn't have any vision of multiple companies, but as opportunities came up to better serve our clients, we started adding companies, kind of almost an intuitive kind of vertical integration philosophy. Starting with adding a title company to make our mortgage transactions easier, golf course management company that kind of sprung up out of our land development and building golf courses to manage those courses better. And we were approached by a wealth management group that wanted to kind of use the Tradition name, and we ended up in that business as well too. And through all of this, lots of financial transactions, starting a bank became something we wanted to do. We got together a group of investors in addition to ourselves, and back in 2005 opened Tradition Capital Bank. And through the financial crisis, we came out of that as a home builder. Actually, two home building companies, and again, we just it's more just kind of being nimble and fluid and looking for opportunities in the market, but all along, how can we better serve our customers? And now, again, 20 plus years later, we look back and there's quite a few different entities inside of the Tradition Companies Alliance. And, again, it's pretty amazing how it all came together, to go back in time and try to recreate it. I don't know if we could do it, but, we're just happy to be here now.
Well, and I know that you're happy to be here, but I know that there's plenty of communities here in Minnesota that are also happy that you guys are here. Tradition Companies, Tradition Mortgage, they have great histories of giving back and being stewards of their communities, and that's been a focus, especially here with Tradition Mortgage. More recently, you instituted a giving back program that I thought was ingenious, and instead of just gathering yourself with a few partners and deciding where to donate money, you actually found a way to empower your employees to spread that giving as far and wide as you possibly could across the Tradition Mortgage communities. I would love for you to quickly explain that part of it, but also the bigger picture on this true belief that you guys have about you make your community stronger, you make everybody stronger.
Oh yeah, no, it's a big part of who we are, and certainly, our patriarch Tip Ennebeck has always talked about, being a force for good. To whom much is given, much is expected, and for us, we get our business from the community. We literally build communities. I mean, we're a home builder and we're a land developer. So for us, we never take it for granted the support we get from the communities that we're based in and that business that is given, and we want to reinvest in the community to help keep the community strong. So really, a lot of even what we would describe as our marketing efforts really are putting money back into the community, supporting, whether that's a high school homecoming or hockey games or different events or tournaments. But how do we, help cover costs that communities are incurring in relationship to their civic events that they have going on? But really, overall, we have been blessed. Our companies have been very, successful over the years. Although at times, with the ups and downs of the economy, you never know for sure what's around the next corner, and there's been some scary times. But when you make it through those times and you find yourself on the other side of it and you're doing well, that to me is the time to be grateful, and that's the time to give back. So for me, when we do give back, how do we allow our entire company to share in that? Whether you're the president of the company or whether you're somebody that just started yesterday. So we basically, on the mortgage side, had our amount that we wanted to give back, and we simply divided that by the number of employees we had, and you got your pro rata amount, and you could decide whatever charity that was near and dear to your heart, you got that amount. So
and you have anywhere from 90 plus employees, and so 90 people, some of them giving to 2 different charities, some to 3, and it's amazing how far and wide that went. I mean, when you look at the list of the number of charities, and when you look at the list, it's actually quite incredible because there are very few doubles, I guess I'd call it. So in other words, a lot of charities got touched by Tradition Mortgage. I thought it was great.
It's amazing. It was really, that was a part of it that I didn't really think about too much when we decided to do this, is just how exciting it would be just to see all these charities, and you realize how many great organizations are out there doing great things that you never hear about. They're just quietly going about their day, making lives better, and it was really fun for us that our employees are involved in all these different things, and they were excited to support them. And so it was just truly a blessing. That was really one of those things that you didn't expect, but really you look back and you're like, man, we got to keep doing this. And we were blessed. It was again, after a scare early in the year, we had a record year. We did have profits that again, we didn't expect. So to be able to give back a little bit extra even, and then have our employees really dictate where that goes, truly that was it was a special time.
So as we wrap up here our very first Tradition Mortgage podcast, being a predictor of what's happening, you have to be a genius, and even then maybe you can't. No one could have predicted the events of this past year as you've outlined, and going forward, everything's kind of reliant upon maybe 3, maybe 4, maybe 5 factors, and every week there's those many factors that are pushing and pulling the market, and so then you're trying to react to that, but you're also trying to set yourself up to react to something that you don't even know in the future. So looking forward, how do you as a president of this company and trying to lead your loan officers and everyone else, what's your, I guess, methodology of looking and saying, all right, we're going to do this, and oh wait, no, we're not. We're going to do this, and it just seems like you can't really rely on anything.
Just to put it in kind of sporting terms, it's just you got to stay in an athletic stance. You got to keep your weight centered over your body, your knees bent, your head up. It's crazy. I've been in the business 27 years, and it never gets any more predictable or easier.
Yeah.
And it's kind of it's part of the frustration, and it's part of the excitement with it. Is it really, things are constantly changing because you have several factors. You have interest rate environment, and then you have the overall strength of the economy and the housing market, and then you have the regulatory environment that can throw everything out of whack depending upon what's the flavor of the day. So really you have that, and then just the competitive environment too. Who's in the market, who's out of the market. No shortage of variables that you need to account for. So again, you got to stay nimble. I would say the biggest thing is you just really have to be a student of the game constantly, and that's where I feel we have the edge, because we have such experienced staff. Like our tenure, if you look at how long our people have been doing this, just so far above what the industry average is. So that really does help. But again, just because you were good in the past doesn't give you a right to just be successful in the future. So you need to continue to work at it, and we just stay on top of things, and you have to be ready to pivot to continue to operate a successful business with also adjusting to the demands of your customers out there, and we'll just continue to keep our knees bent and our head up and stay athletic.
Well, and I look forward to these podcasts going forward. As I mentioned, we're going to talk about the industry, talk about the markets. We're going to talk about which way we think things are going. We're going to bring in guests from multiple parts of the industry, whether it's a real estate agent or a wealth manager or different people that interrelate with Tradition Mortgage and the companies that Tradition companies have. And it's going to be exciting because we always laugh about the fact that maybe mortgages themselves aren't exciting, but all the details surrounding them can be, pretty intricate. And love the fact that we're going to have yourself and a lot of other professionals kind of breaking different aspects of that down, and going forward we will continue to bring that kind of content and education, because truly that's what it is. Erik, I thank you for your time, and I look forward to our next one down the road here.
Yeah, thanks, Mike. It's going to be great. Looking forward to it.